Yesterday, U.S. stock markets were closed in observance of Martin Luther King Jr. Day. Traders mostly assessed the events of the last week. Of course, the highlight of the last week was the announcement of Joe Biden's American Rescue Plan. He proposed a $1.9 trillion plan to help tackle the coronavirus pandemic. Market participants negatively reacted to this news, so the Dow Jones Index sank by 1.12%. Nasdaq Composite lost 2% at the closing of the trading week. Undoubtedly, the new stimulus measures will help revive the economy, but at the same time, trillion-dollar spending will significantly increase the already large budget deficit. This is why many market experts are uncertain that the stimulus plan will receive approval in the Senate, even from Democrats. The S&P 500 index also ended the week with losses of 1.93%. Apart from doubts about the stimulus plan approval, investors were disappointed with the earnings report of the largest financial organizations in the U.S. So the quotes of the biggest U.S. bank, J.P. Morgan Chase, declined at the end of the week, although its shares managed to gain 2.24%. In terms of assets, the bank made a record net profit in the fourth quarter of 2020. However, the chart went down because the bank was able to increase profit by reducing its credit reserves by about $3 billion. The stock price of Citigroup, one of the three largest U.S. banks, also tumbled, despite the reporting profit for the fourth quarter, which was better than expected. However, investors were discouraged by the revenue results, which fell short of expectations. Wells Fargo shares also sank due to insufficient revenue, which was worse than markets expected. This week, the largest U.S. companies will continue unveiling their earnings reports for the fourth quarter of 2020. You've watched Weekly Financial Review with me, Anna Kasatkina. Subscribe to our YouTube channel to always keep track of all the latest events on financial markets, and we'll see you back soon.